Something interesting has been happening in the US and European markets. Wall Street indices ended in the red on Tuesday after a weekend on Monday. The S&P 500 fell 0.7%, Nasdaq Composite fell 0.8%, while the Dow Jones Industrial Average fell 0.6%. Now, the reason traders were nervous was after a federal appeals court ruled late last week that Trump's tariffs were actually illegal and should be suspended by the 14th of October. This also led to a big sell-off in government securities from Europe to the US and now to Japan as well. Bond yields have risen sharply to near 5% in the US, 27-year highs in the UK, and a 16-year high in France. Traders are nervous about several indicators, from key economic data and the US tariffs to Fed independence, mounting debt, and monetary policy and global fiscal prospects. So lots of factors that are playing into the sentiment here and really affecting what we're seeing on those global market ticks. Gold, meanwhile, extended a 6-day rally to hit a fresh all-time high. We've all keenly been watching the move on the precious metal as the prospect of the US interest rate cut boosted the metal's appeal, and traders sought safety following a sell-off in equity and bond markets together. Gold for immediate delivery rose as much as 0.4% to hit $3,547 an ounce as markets opened in Asia on Wednesday, narrowly higher than Tuesday's record. Prices have advanced 5% over the past 6 sessions, underpinned by increased haven demand amid renewed concerns over the Fed Reserve's future and budget concerns in the developed world countries. Gold has also risen more than a third this year, making it one of the best performing major commodities. Gold and silver, of course, continue to remain key investment picks right now. But let's move across to my colleague Shailendra Bhatnagar, Chief Analyst and Editor Markets, Business Today. Shail, on this move in gold, it's fantastic, but just break it down further for our viewers as to why it's shooting up.
Good morning, Abha, and a very warm welcome on this wonderful show. In school, we read Shakespeare, Abha, and that wonderful line always comes back to me: all that glitters is gold. And this is exactly what is happening as far as markets are concerned. We'll see 1,06,000 rupees per tola maybe today. As you mentioned, it's a 5-day rally, and both gold and silver are rising for 2 very sound reasons. This geopolitical issue between the US at one side, China, Russia, India, and other BRIC countries at the other, plus rising bond yields, as you mentioned, are the reasons why you have this wonderful rally in gold. And things are only going to get better and better as far as gold and silver is concerned. That's because it's safe haven buying. Central banks are buying, you are buying, I am buying. Everybody is out to buy and save themselves from inflation. So these are the 2 major reasons why gold and silver are up, and they are the top performers as far as any asset class is concerned. Things are going to get better from here.
All right, so the outlook remains positive as well. Shail, how does that impact long-term bonds?
Well, Abha, that's a very interesting question that you put up. And again, there is that lovely Wall Street dictum which says, gentlemen prefer bonds. And the reason is that there is fear in global bond markets that you will see slowing growth in especially the UK, especially large parts of Europe, and of course, to some extent, India as well, because of the GST rejig, and the US too. And that's the reason bond markets are sort of edgy, and they are pricing in that slowing growth. They are also pricing in a cut in interest rates, especially on Wall Street. And that's the reason, Abha, that you have higher bond yields coming into not only the US, UK, and other European markets, but in India too. The GST rejig, which is about to take place today, may result in a minor drop in GST collections that might force the government to borrow from the bond markets, and that is what is exactly being priced in. The Indian 10-year yield has also risen from August 18th, just a day after the Prime Minister made his Independence Day speech. So both bonds, gold and silver, are in a very super bull market as far as risky assets are concerned. Abha.
All right, Shell, stay with me because, of course, lots of action on Wall Street overnight. But talking about some of the cues for the bond markets, as you just mentioned, and with all eyes on the GST meet, we've opened or seeing a gap up on the Nifty in pre-open. I'm just going to pull up some of those opening ticks for you. A marginal uptick, but almost 0.2% there. Then, with the sectoral indices, banks are still soft, but it's really the Nifty to focus on this morning to see the kind of sentiment. See, as we're watching, in fact, the ticks are moving higher as we speak right now. So clearly, Shell, I'm going to get a quick take from you there because the sentiment impact is obviously immediately playing out.
Absolutely, Abha, and the reason is very simple. GST rejig means lower costs for two-wheelers, four-wheelers, stocks such as Hero Motors, stocks such as Eicher Motors, tractor maker M&M, all of them are benefiting. In fact, look at Maruti. Small cars will become much more attractive because GST prices will come down. And as you know, since February, the government has been giving lots of SOPs. So first we had an income tax rate cut in the budget. Then we had this rejig as far as corporate taxes are concerned, and now the GST rejig. In the background, you have good monsoons, you have lower interest rates, and that's the reason why Dalal Street is super excited. Mostly auto stocks, mostly FMCG stocks, and of course consumer durables. Abha.
All right, Shell, thanks so much for that. And auto has seen a lot of news this week.